Interest rates are one of the most important indicators of the health of an economy. If they are too high, this may suggest a counteraction to the inflation in the system. If they are too low, this would signal a failing economy in need of stimulus. If they are negative, this may suggest a rotten corpse economy being pumped with fresh blood to temporarily disguise the stench of the deceased. The Bank of Japan is the next country in the list to go beyond what was thought possible and introduce negative interest rates. You came here for the truth, so let me unveil that for you. Today, we are going to get into how Japan has now introduced negative interest rates. We are also going to discuss some funny business that's going on in the Chinese markets and also various other details, beginning with this. The Bank of Japan introduces negative interest rates to boost the economy. That's right, negative interest rates to boost the economy. That is propaganda. The Bank of Japan introduced the negative interest rate policy in a move to boost a stumbling recovery in the world's third largest economy. Central Bank said it's imposing a 0.1% fee on deposits left with the central bank, effectively a negative interest rate. It hopes that it's going to encourage banks to lend more and stimulate investment and growth. So surely the commercial banks may decide to lend more. But what does this say about the economy? If people aren't taking out loans now with very low rates of interest, getting them to borrow more isn't a solution. People don't need to borrow at this time because they are cash strapped. This goes for most of the countries around the world at this time. This is a failed policy. Bank of Japan is doing the same thing that other countries are as well. And even if they haven't moved into the negative territory, there are many central banks which are right near the zero mark, and I've covered that before. So let's move into what's going on in China. Now, it's 2 p.m., time for the Chinese stocks to fall. So something interesting has been happening. I'll cover the article, but I wanted to just make a few notes on that. Shares have been making sharp moves in the final hour of trading like they did last summer. But this time, the direction is usually down. Where is the, quote, national team? Let me just finish here. In the Chinese markets, the 2 o'clock phenomenon is back with a twist. On 8 of the 14 trading days since January 11th, the Shanghai Composite Index, that's, let's say their hallmark, or they're calling it the benchmark index, has moved more than 1% in the last hour before the 3 p.m. close. On 6 of those 8 occasions, the market headed south. So that's a trend. Whether it's going to continue on, we don't know that. But they're saying the same thing happened before, except in the opposite direction. It was pushed upwards. Whenever something this dramatic, like a percentage, that is significant when we're talking about such big amounts, for it to move up in that last little while, I have to believe that this is manipulation. They do this to force the markets up in that final period. If it doesn't do it naturally, they basically go ahead, whether it's the plunge protection team and just high frequency traders, or you have indirect, let's say, support, whether it's the government funding corporations in order to purchase those shares for them, they're able to push the markets up. But they don't necessarily divide their shares in between all companies. That's not how this works. They choose a handful of companies and prop them up. So you will see that certain companies, many of them in fact, are doing very, very poorly. But then compared to, let's call them the elite class of these particular stocks, whether it's the Facebooks in the technology sectors, or the Apples, or what have you, the big guns, they may be doing well in comparison to the general market. So this is something that we need to keep our eyes on. This is a connected article out of CNBC talking about volatility. Volatility is important to watch, not just the volatility index, but what this signals. There is an increasing risk that the elevated volatility starts incurring enough technical damage to market psychology and spills over, negatively impacting the investors, consumers, and business sentiment, resulting in a lack of risk taking and eventually creating a negative feedback loop into the real economy. I would suggest to you that the real economy is put down and it's finally making its way into this feedback loop, which is all false, bringing its way into that and finally getting noticed. That's what's not being discussed. The volatility is all taking place by the plunge protection team, by the hedge funds and the derivatives that are all interconnected with this. The average investor who has his pension fund and who has his 401k, RSPs, his supers, everything that's real to you and I is being played with in the markets. And even if it's they suggest it's long term. Whenever you go to a financial advisor, they always ask you, what's your risk tolerance? Well, if it's for the long term, if you have that 401k, you're not going to need it for 40 years. We're going to put you into a high risk investment. But that high risk investment may be worth nothing by the time you need to cash out on it. So this is all what it's trying to do. Basically, let's play with the money now. Let's take the biggest risks we can now so that in 40 years when you need to start cashing it in, it'll be higher. We know how this all works and you know where I'm going with this. The volatility will increase as time goes on for the foreseeable future. And this is what it all comes down to. This is from my book. This is the sort of the symbol of the money GPS. I've shown it before, but for those who are new to the channel, essentially what we have here is an upside down pyramid. Now the pyramid, whether, on its normal way, where, not the upside down version, is a very strong structure. But what happens when you tip it onto its head? Well, you have a very unstable structure. And what I say here is that this is the banking system. Real assets are on the bottom, attempting to support the massive fraud that sits on top. When you have all these schemes which sit above your cash that's in the bank and your everything that you have as an asset, that's a very small portion to what is out there. They put this fractional reserve banking scheme on top of us where, let's just say for argument's sake, you put in $1 into the bank and they're able to loan out 10. Already, that's extremely bad. That is an accident waiting to happen. It's a disaster waiting to happen. But that's even so small in comparison to the derivatives market, to all the financial gambling. In fact, this is not to scale at all because fractional reserve banking should be even smaller and the derivatives should be even larger. That's just the way this should work. What I would like to say about this is that when you have a system like this, it's designed to fail, it's doomed to fail, and it certainly will. Where there is risk, there is fragility. Where you have this fragility, you will have destruction. And then on the other end of the spectrum, you have the rich getting richer. Doesn't that sound like a broken record? Mansion prices show no signs of slowing down in these rich enclaves such as the Hamptons, Beverly Hills, and Aspen, suggesting that the global market panic has yet to spread to the top trophy homes. And we're talking about the highest of the high, and we're also talking about only in certain areas. It's not a general theme that's occurring right now. And this goes for anywhere in the world. Why? Because the richest of the rich people are getting more rich, and the middle class, the upper middle class, are not doing so well. Then we have this, which I find very interesting. I've been covering definitely the robot situation, automation situation. I feel it's very, very important. Driverless bus trial in Netherlands is the first on public roads, and I did cover this recently. I believe this is the same type of unit. This is excellent in a way. I do feel, though, that what it will do for jobs is not so good because there used to be a driver behind there. And that driver, although probably wasn't making the best money, he would contribute to the economy because of that position he had. Slowly but surely, they will eliminate many of the tasks like this. Taxi drivers, bus drivers, and in this case right here, you have sort of a bus that transports, I believe it's at the airport. Regardless, slowly but surely we're going to see this automation. And this goes with other things that I'll talk about some other day. 10 publishers account for half of all online news. Now imagine that, 10 publishers. And I'm sure if you really get into the nitty gritty, you'll find that it's actually much less. But let's just even think about that for a second. 10 publishers. So where are you getting your news from? One person might say MSN.com, one person might say CNN, another person says this or that. What you are really getting your news from is generally all from the same source. This is very frightening because it goes to show you that there is really limited amounts of information coming through, very small pipelines bringing that through, and they can be compromised very easily. Alternative news obviously being a very important channel, but that information still comes through in limited areas. The social media platforms, which are big, which are able to get to the biggest communities, like YouTube, for example, are very controlled. So this is very, it's very scary to think about. That's all I wanted to mention. This to me is huge. U.S. schools get failing grade for financial literacy education. The number of states that require high school students to complete a course in economics has dropped over the last 2 years, basically going into they're not able to know about their financial education. Now, I don't think that your standard economics course throughout your high school career is going to teach you really anything, but it would be better than nothing, I would say. But that seems to be changing anyway. I devote this channel to financial education, and I know so many of you support me on that. I think it is absolutely crucial that people know the basics of financial education. And I'm not talking about investing for the long term in your retirement account. I'm talking about actually understanding the way this system works, understanding the basics of politics, understanding the basics of economics, what to do, what to look for, just the basics. You don't need to be a professional. You just need to understand a few simple things and how it all works. So when you put your money into the banking system, you need to know the details of what's happening. Understand that that becomes their money. Where does that money go? Where does the money come from in the first place? And what I'm getting to is that I've been creating a free e-course on this channel here, and I'm doing that specifically to educate the public. Many of you on here know it all. They know about the economics. They know about central banking, but a lot of our friends and family do not. Many people on here might be new to this and they don't understand it either. So that's why I've been creating this free e-course. The free e-course is basically, if you go to the main YouTube channel page, the Money GPS, you just go to that part of YouTube, you find the Money GPS e-course, and anyone could just watch the videos on there. You can also go to themoneygps.com/free e-course, and that's available in the description below the video if you want to check that out for yourself as well. My goal, once again, is to educate the public in this e-course format, lots of diagrams, lots of very simple explanations that make it easy for everyone to see. Then, if it's, for example, for your uncle who's not really savvy in this, doesn't want to get into the deeper details, they look at the e-course. Then when they finish into these e-course videos, it's going to take them into different directions, and that's when we start waking them up. We get the simple, easy stuff. They start learning about bail-ins, they start learning about central banks, and then they start asking questions. And you don't have to do anything. You just point them to the e-course and let it all happen. That's really what I'm trying to do here. I hope you do appreciate that. I hope you do appreciate all of my ranting. Of course, if you found this video informative, please give me a thumbs up. I'm going to continue to do as many videos, informative videos, as I possibly can. Appreciate your support. I'm seeing all your comments, all your kind words, and I do try to reply to as many as possible, as always. Last but not least, if you found the video informative, I know you'll find my book, The Money GPS, even more informative. If you want to go and look through the book, head over to Amazon. They have a look inside feature, which allows you to flip through the pages of the book and see if you like it. Take care.